and they tend to work well together. The other thing about volatility is it's basically a complacency indicator. When volatility gets really low, that's basically traders saying, I don't have a care in the world. Everything's working the way I want to, so I'm not worried about it at all. You see that a lot in stock indices, that when volatility gets really low, that's when the bigger moves start. So in this case here with the Canadian dollar, the sideways action inside of this triangle, you can see how it's compressing. That's giving you a feeling that something's going to happen. Once you get the breakout, that told you it's going to happen, or it did happen, and now this volatility indicator is going to tell you that you're going to get a pickup in volatility. Now, in addition to volatility indicator, you can always throw in a moving average if you prefer. And you want to look for, when you're working with moving averages or any price indicators, you want to see if there's overlap with any of the Autochartist indicators. Okay, so if you're working with an Autochartist target zone, for example, you want to make sure that you'll have those numbers identified, but you want to see if we have moving average perhaps coming in near the same level. Okay, so that's one way to do it. Look for what we technicians call support or resistance clusters. So if you can come up with 2 or 3 independent price indicators that overlap the Autochartist target zones or the power stats indicators, then that usually means that the masses are going to be attracted in those areas. That means you're going to have a lot of traders down there. And so it's usually an area that maybe if you're short into it, you may want to, again, lighten up or close out your position, because there's going to be enough activity down there that you don't want to cause yourself to give back any of the profits that you have. The same thing when you're working with stops. Okay, there's normal movement in the marketplace, and if you can see that, for example, this resistance line coming in here, and you had another top inside here, okay, inside this triangle. If you had a moving average line coming in, and it was stopping the market inside this triangle, you may want to use that to help you determine a stop point. All right, instead of letting the market go all the way back up to this resistance line, you may find an area in here. And you can also use other indicators such as channels or Gann lines or even Fibonacci retracement levels that are not being picked up by Autochartist Fibonacci pattern tools. There's whatever indicators you can come up with using conventional MT4 tools or again these indicators or oscillators, they all help. I tend to like to work with patterns and price. All right, I'm not a big oscillator fan, so I'm not big on looking at stochastics and RSIs and things like that, but that's my personal preference. But if you can use it to work with Autochartist, then of course more power to you. So if we looked, for example, at an oscillator here, for example, let's see if we could find, let's look for relative strength. Okay, relative strength tends to indicate overbought and oversold markets. And you can see that maybe here, when it crossed under the 30 level, okay, that it was oversold, and that corresponded with this bottom here. All right. Now, if you're a swing trader, if after Autochartist has identified this bottom, usually takes about 1 or 2 bars, okay, before you get a confirmation that a bottom's in. So you can use oscillator maybe in conjunction with trying to pick tops and bottoms, but that tends to be more popular if you're a swing trader and you want to trade inside and you believe the market's going to trade inside these lines. If you're a breakout trader or a momentum trader, which I like to be, and also which Autochartist tends to be, because these completed patterns are basically breakouts, then you really want to stick with working with momentum or volatility indicators, because you can see with this you're getting a big drop off in the market, the oscillator's turning down, but it's going to get close to this oversold again. What you could do is you may prematurely exit this position and you still have all this room to the downside. And that's part of the reason why I'm not a big oscillator fan, is because I think it gets you out of chart positions early, and it gets you and you miss out on a lot of moves. So if you're going to try to find anything that works well with Autochartist, then use the volatility patterns. That's that tends to be the best way to go in my book. Okay, now getting back to the main screen here, so you can see if anything's new has come up. Looks like this U.S. Swiss franc has come up and it's pointed down. So let's go back to this MT4 plugin here, and let's go to this U.S. Swiss, and we'll drag that in here. Now, as you're going through this, as we're watching this, try to think of some of the benefits that you've been able to pick up from watching this today. So I think we're going to have a couple of questions coming up that are going to kind of jog your memory a little bit. All right, you can see here that this was a channel up pattern. Okay, now a channel up pattern is different than a triangle pattern, obviously, but in more ways than one. A channel up pattern is what they call a trending pattern. So you can see that there was a trend inside this pattern. The triangle pattern is non-trending because there's compression, with this coming down and this going up. So when you're dealing with a trending pattern, you tend to get these wide moves. So in this case, you can see that initially when it broke through here, it came down to this level and then ricocheted back up. If you're working with trending patterns and you see how far the market's come down before it broke through, the tendency of a channel is that you're going to get this snapback, okay? And this snapback, sometimes you can use a retracement of this high to this low, and you can figure out where it can go back to, okay? So you have to adjust your strategies, in my opinion, when you're using trending patterns like channels than when you're using non-trending patterns like triangles. If you see that this is relatively wide, all right, then you may want to wait for the market to go through and then sell or rally back, because the trend's still down. It's just that it's run out of sellers down here. All right, then once you get that snap back, then play for the rest of the move. You can see that momentum picked up again and the market actually went through the entire target zone. And this is where power stats comes in too, because it's going to be able to tell you, should be able to tell you or help you determine, how far you're going to have. If you sell weakness on a channel pattern, how much heat you're going to take. Okay, triangle patterns are different because when they compress and they get to that apex, when they break out, they tend to keep going. Channel patterns, again, are different. You get a little bit of a comeback. All right, so we're still waiting to see what Power Stats has to say about this. But if Power Stats is telling you that this market has a tendency to rally back to a certain point or could go to a certain point based on historical volatility, then what you want to do in that case is you want to make sure your stop's outside of that normal move. Okay, that's basically the noise of the marketplace. In other words, there's a trend developing, but then these counter trend moves are just noise where market just zigzags back and forth. So when you're placing stops, always remember to try to stay out of the noise so that you're not caught in that whipsaw. And again, one thing you want to watch here when you're dealing with channels is look at how far the market's come down on the breakout and consider a strategy where you sell a rally back but in the direction of the trend. Okay, you can see here that we're still waiting for our power states data to come up, that the momentum really picked up through here. Now, when you're dealing with this target zone, another strategy that I like to use is when the market goes through it, okay, I have an opportunity to use either this extreme level or this extreme level as my stop. Now, the first time through, I tend to want to, if I'm trailing a stop, I put a natural stop above the high level of this target zone. All right, and I say to myself, my trailing stop gets hit, then I'm out because it hit the target zone. I was playing for more, but I'm not going to give back anymore. If the market keeps going like it did, and it pierces the bottom of the target zone, then I place my stop somewhere slightly above the bottom of this target zone so that if it comes back in here, then I've captured as much as I could, and it still at the same time allowed it to go further. And in that case, that would have stopped me out, and you could see that I would have given back quite a bit of this move if I'd have held on. Okay, so that's just something to remember. Now, this is a hourly chart, a 60-minute chart. So we're looking here. You can see that the 60-minute target was actually down here, which is almost precisely where this market did drop. So if you do use those power stats, remember that they're going to change according to the time period. So if you're using a 60-minute chart, then you have to wait each hour. You're going to get a new projection. So in this case, it was fairly accurate. So keep that in mind. Again, a recap, channel patterns, watch the size of the move through, and consider selling breakout or retracement back rather than momentum. Trail a stop and use the target zone. Either get out of everything at the target zone or lighten up, or if you're going to use it as a trailing stop, use the upper level as an exit, and then if it keeps going down, then use the lower level as your exit also. Now I just want to go back to this other chart here, this Australian dollar. This was a triangle formation, if I remember right. Let's take a look here. Yeah, it was a triangle formation. You can see that the difference between a triangle and a channel, you see this compression? This is pinpointing or telegraphing that this market's going to move. Because if we extend these lines out, this market, these lines will eventually hit a point, and the market's going to have to go one way or the other. So in this case, you want to play breakouts on that. You want to buy strength and you want to sell weakness on triangles. When you go to channels, you want to be a little bit more careful about it because, again, there's not a lot of volatility in a channel move, but there's a lot of volatility in triangle moves. Triangles are very popular for momentum traders. All right, and looks like we have a couple more minutes and we'll have some questions. Let's see if we're getting any more action here. Again, I'm going to take my shortcut and I want to take a look here, and it looks like we have some patterns developing on the emerging side, but what we have here is basically the dollar seems to be getting punished today, so that's why the Swiss franc is gaining on the US dollar and the Australian is here. So every pattern that we looked at seems to be working well this morning, at least for the time frame we looked at. Let's take a look at this. Well, here's the Australian dollar. You can see that if you want to, another thing you can do with this chart is, with this program, is you can blow up the chart. You can see how I hit this plus or minus sign, the magnifying glasses, and you can see that it can blow up the pattern, so you can make it as easy for you to see as you like. Okay, you can see now the structure in this triangle. Okay, now also if you wanted to, if you're a fan of this, you can control the different colors that you can look at. Okay, so I like to look at bar charts and I adjust my colors. I like to work with red and green. not because it's Christmassy, because it represents gain and loss. Most of the charts I look at are always red and green. You can also easily switch to a candlestick format here, and this is another tool that you can use. Okay,